The financial world is in constant motion. Taxes are a big part of that world. They are always changing. Now, a new tax act is coming. This act will bring big changes to how we pay taxes. These changes will affect both individuals and businesses. The goal of this new tax act is fairness. The government wants to make sure everyone pays their fair share of taxes. This sounds good, in theory, but in reality, it can be complicated. The new tax act will change the rules. Finances. One of the biggest changes in the new tax act is to the income tax brackets. These brackets determine how much tax you pay based on your income. The government is adjusting these brackets. This means some people will move into a different bracket. If you move into a higher bracket, you will pay more taxes. If you move into a lower bracket, you will pay less. It's important to know where you stand. Section 2. Deductions and credits. A new landscape. Deductions and credits are valuable tools. They can lower your tax bill. The new tax act is changing the rules for deductions and credits. Some deductions and credits will be reduced. Others will be eliminated altogether. There will also be new deductions and credits available. It's a lot to keep track of. Section 3. Capital gains. Navigating the investment impact. If you invest in the stock market, pay attention. The new tax act will also impact capital gains taxes. A capital gain is the profit you make when you sell an investment for more than you paid for it. The new act could mean higher taxes on certain types of investments. This is especially true for high-income earners. Section 4. Corporate tax restructuring. A new playing field. The new tax act will bring significant changes to corporate taxes. These changes are designed to create a fairer system. They are also designed to boost economic growth. One major change is the reduction of the corporate tax rate. This is intended to make American businesses more competitive globally. The new tax act aims to provide some relief for low-income earners. The adjustments to tax brackets are designed with this in mind. However, it's not all straightforward. While some low-income earners may see a decrease in their overall tax liability due to these bracket changes, others might not experience a significant difference. Additionally, the Act revises certain credits that could impact this group. For middle-income earners, the impact of the new tax act is less clear-cut. The changes could swing either way, depending on your specific income and financial situation. Those in the upper end of the middle-income bracket might find themselves pushed into a higher tax bracket. This could lead to increased tax payments. However, changes to deductions and credits could offset this increase for some. It's essential to analyze your individual circumstances. Look at how the new tax brackets affect you. High-income earners will likely see the most significant changes under the new tax act. The Act focuses on ensuring those with higher incomes contribute a larger share. The new tax brackets will mean higher rates for those in the top tiers. Additionally, changes to capital gains taxes could impact those with significant investment portfolios. Preparing for these changes is crucial. High-income earners should review their investment strategies. The new tax act brings a wave of changes. and maximizing deductions remains a cornerstone of effective tax planning. While some deductions might be altered or phased out, new opportunities are likely to emerge. Start by familiarizing yourself with the updated deduction landscape. Understand which deductions are still available to you and how the new rules might affect their application. Pay close attention to deductions related to home ownership, healthcare expenses, education costs, and charitable giving. Consider utilizing tax software or seeking guidance from tax professionals. Beyond maximizing deductions, explore a range of strategic moves to further minimize your tax liability. The new Tax Act might create opportunities for savvy taxpayers to optimize their financial decisions. Consider tax-efficient investing. Explore investment vehicles like Roth IRAs or municipal bonds that offer tax advantages. Consult with a financial advisor to determine the most beneficial options for your portfolio and risk tolerance. Evaluate your tax withholding. Charitable giving not only benefits worthy causes, but can also offer valuable tax advantages. The new Tax Act might introduce changes to charitable contribution deductions, so it's essential to understand the updated rules. Familiarize yourself with the adjusted gross income limitations for cash and non-cash donations. Explore strategies like bunching charitable contributions in a single tax year to maximize deductions. Consider donating appreciated assets directly to charities instead of selling them and then donating the proceeds. This approach can potentially allow you to avoid capital gains taxes on the appreciated value. Section 1. Small businesses navigating the labyrinth. Small businesses form the backbone of the American economy. The new Tax Act brings a mix of potential benefits and challenges for these entrepreneurial endeavors. Understanding the implications is crucial for navigating the changing landscape. One of the most significant changes for small businesses lies in the potential restructuring of tax incentives. While some incentives might be scaled back or modified, new opportunities could arise. Section 2. Tax incentives, a helping hand for small business owners. Tax incentives can provide a much-needed boost for small businesses, fostering growth and innovation. The new Tax Act might introduce changes to existing incentives or create new opportunities for eligible businesses. One area of focus could be incentives related to job creation. The Act might offer tax breaks or credits to businesses that hire new employees. Understanding these provisions can be advantageous for businesses planning to expand their workforce. Section 3. Corporate giants. Adapting to a new era. Large corporations, with their complex structures and global reach, face a unique set of considerations under the new Tax Act. Understanding the implications for corporate tax rates, international operations, and financial strategies is paramount. One significant change for large corporations lies in potential adjustments to corporate tax rates. The Act might introduce new rate structures or modify existing ones impacting profitability and investment decisions. Analysing these changes in detail is crucial for financial forecasting and strategic planning. Section 4. The economic ripple effect. Short-term adjustments, long-term goals. The new Tax Act's impact extends beyond individual businesses, creating a ripple effect throughout the economy. Understanding both the short-term adjustments and the long-term goals of these changes is crucial for businesses and policymakers alike. In the short term, businesses might experience adjustments as they adapt to new regulations, tax rates, and incentive structures. This period of transition could lead to shifts in investment decisions, hiring practices, and overall economic activity. However, these adjustments are typically part of the natural process of adapting to policy changes. Short-term versus long-term economic projections. A balancing act. Predicting the economic impact of a major tax act is complex. Economists analyze both short-term and long-term effects. The new Tax Act's projections vary based on many factors. Short-term, businesses might be cautious about investments. Consumers might hesitate to spend freely. Long-term projections are often more optimistic. The goal is to stimulate economic growth. Remember, economic projections are not guarantees. Analyzing both projections gives a balanced understanding. Section 2. Effects on employment rates. A delicate equilibrium. The relationship between tax policy and job creation is complex and often debated. Some argue that lower corporate tax rates can lead to increased hiring. Businesses with more after-tax profits will reinvest those funds back into their operations. Others suggest tax incentives targeted at job creation might be more effective. This approach aims to directly incentivize businesses to expand their workforce. Section 3. Influence on consumer spending. Navigating the shifts. Consumer spending drives economic growth. Understanding Tax Act influence is crucial for businesses and policymakers. The impact varies based on the Act's provisions and consumer perception. Income tax reductions might increase disposable income. This could lead to higher consumer spending. Conversely, tax increases might decrease disposable income. This might result in cautious spending, slowing growth. Consumer confidence significantly influences spending patterns. Section 1. Seeking expert guidance. Your tax planning allies. Navigating the complexities of a new tax act can feel overwhelming. Seeking guidance from experienced professionals can provide invaluable support and peace of mind. Remember, you don't have to face these changes alone. Tax professionals, such as certified public accountants, CPAs, and enrolled agents, EAs, possess in-depth knowledge of tax laws and regulations. They can analyze your individual financial situation, identify potential areas of impact from the new Act, and recommend personalized strategies to minimize your tax liability. Consider utilizing tax software programs, which are readily available and user-friendly. These programs guide you through the tax preparation process, ensuring you don't miss any deductions or credits. They also incorporate the latest tax law changes, keeping you up to date. Remember, seeking professional guidance is not a sign of weakness, but rather a smart financial move. It demonstrates your commitment to managing your finances responsibly and maximizing your financial well-being in the face of change. Section 2. Proactive steps. Taking control of your tax future. Seek professional guidance, and take proactive steps to prepare for the upcoming Tax Act. Review your current financial records and gather previous year's tax returns. Adjust your withholding allowances if needed. Align your tax payments to avoid surprises during tax season. Take action now to minimize stress and avoid penalties. Section 3. Staying informed. Your key to navigating change. The tax landscape is constantly evolving. New laws are introduced, regulations are updated, and interpretations can shift over time. Staying informed about these changes is crucial for making sound financial decisions. Utilize reputable sources of information. Government websites, such as the IRS website, irs.gov, provide comprehensive details about tax laws, regulations, and any recent changes. Reputable financial publications and websites also offer valuable insights and analysis of tax-related matters. Be cautious of misinformation. In today's digital age, misinformation can spread rapidly. Rely on trusted sources for your tax information and be wary of sensationalized headlines or unsubstantiated claims. Cross-referencing information from multiple reputable sources can help ensure accuracy. Remember, knowledge is power, especially in the realm of personal finance. By staying informed about tax law changes, you equip yourself to make informed decisions that align with your financial goals and protect your financial well-being. Dispelling the myths, separating fact from fiction. The new Tax Act has generated a lot of buzz and misconceptions. It's essential to separate fact from fiction. Don't let inaccurate information lead you astray. One common myth is that everyone will see a tax increase. In reality, the impact is nuanced. It depends on individual circumstances and income levels. Stay informed and consult with tax professionals. Address financial decisions. Embracing change. Navigating the tax landscape with confidence. Change is a constant in life, and the realm of taxes is no exception. The upcoming Tax Act brings changes, but also opportunities to reassess your financial strategies. Proactive planning is crucial. Review your finances and seek guidance from professionals. Approach this new tax landscape with confidence. Your financial well-being is a journey of knowledge and planning. Your financial journey is unique, so seek knowledge. Understand the basics of taxation and how changes to tax laws might affect you. Plan ahead. Don't wait until the last minute. Proactive planning minimizes stress and maximizes well-being. Seek guidance. Don't be afraid to ask for help. Embrace change. The financial landscape is constantly evolving, and so should you.